Okay, let's dive right into this explainer. Today, we're revealing why calculating your true costs before you even start home shopping is hands down your ultimate survival tool for the Texas housing market. Look, if you're planning to buy property in the Lone Star State, getting a crystal clear picture of your finances isn't just a nice to have. It is absolutely essential to do before you ever make an offer. We're going to break down exactly how to use a Texas-specific mortgage calculator to turn a mountain of complex data into a clear, totally manageable plan for your future.
Right, so we all start with that beautiful dream of homeownership. You're browsing online, scrolling through stunning photos, and honestly, it is dangerously easy to fall in love with a sticker price without actually understanding the tough reality of the real estate market. It's kind of like a giant puzzle, trying to balance saving for your future while paying for a house right now. And the absolute last thing you want is to end up house poor. You know, where you own the dream home but have literally zero cash left over for your actual life.
There's a great saying that the secret to financial freedom is not just earning more, but understanding exactly where your money goes every single month. And that brilliantly illustrates our main focus today. Running a Texas-specific calculator to simulate your future is absolutely critical to avoid major financial heartache down the road. If you don't nail down these exact, localized numbers early on, you could miss massive costs that will totally bust your budget.
Okay, moving on to our first section. Unpacking a Texas mortgage and the hidden costs involved. Let's peel back the layers on that monthly payment.
Biggest reality check for most buyers, the loan itself is really just the tip of the iceberg. Lenders use a formula called PITI to decide if you can genuinely afford the house. That stands for principal, interest, taxes, and insurance. The principal is the actual money you borrowed, and the interest is simply the cost of borrowing it. But it's those last two letters, taxes and insurance, where Texas buyers get totally caught off guard.
When you actually break down a typical payment, it is shockingly clear how much of your cash goes toward local Texas property taxes and escrowed homeowners insurance rather than just paying off the house itself. Since Texas doesn't have a state income tax, local cities and counties rely heavily on property taxes. So your lender will actually take a chunk of your estimated annual taxes and insurance every single month and hold it in an escrow account. It protects the home, sure, but it significantly inflates that monthly payment.
Let's put this into perspective. Down in Bexar County, for example, property taxes sit at roughly 1.7% of the home's value. That is exactly why using a generic, non-Texas calculator will completely set you up for failure. If you use a basic online tool that just defaults to a national average tax rate, you're going to severely underestimate your monthly costs. You absolutely need a Texas-specific calculator that accounts for local county rates and things like the Texas homestead exemption.
Oh, and you can't forget the extras. You've got to factor in community HOA fees, private mortgage insurance, and local recording or title charges that hit your cash to close. Even without a statewide transfer tax, those local fees add up fast. If your new neighborhood has a homeowners association, those fees are non-negotiable for maintaining community spaces. They might not show up on a basic calculator, but they are absolutely part of your true monthly living costs.
All right, Section 2, Navigating Texas Interest Rates. Let's look at the levers of affordability that you can actually control.
First up is choosing your rate type. You basically have the absolute safety of a fixed-rate mortgage versus the initial but way riskier savings of an adjustable rate mortgage or ARM. A fixed rate locks you in. For the whole 15 or 30 years, that principal and interest payment will not change. It is incredible for predictable budgeting. An ARM, on the other hand, starts lower, but it adjusts with the market over time. So you really have to weigh long-term stability against short-term savings.
And speaking of the market, let's talk volatility. A mere 0.5% rate increase means you might need to spend $20,000 less on a house just to keep your monthly payments the exact same. Let that sink in. The Texas market ebbs and flows, and if you wait too long and rates jump just 0.5%, your purchasing power drops like a rock. This is exactly why you absolutely must run different rate scenarios through your calculator before touring a single home.
And what actually controls the rate you get? Your credit score. Checking your credit report for mistakes before applying is vital. A better score means lower rates and, frankly, a drastically more affordable monthly reality. Seriously, even a minor bump in your score can drop your rate enough to save you massive amounts of money. We're talking tens of thousands of dollars over a 30-year term.
Moving right along to Section 3, comparing your loan options. Let's see how all of this helps you pick the right mortgage program for your goals.
Not all mortgages are created equal. You know, if you have strong credit, a conventional loan offers great flexibility. For first-time buyers with slightly lower credit, an FHA loan lets you put just 3.5% down. And I have to mention the incredible benefits for our military. VA loans offer zero down payment and no PMI options, which is huge. Finally, if you're buying a high-value property in a hot market, say Austin, you might need a jumbo loan, which requires a higher credit score and more cash up front.
Now, a quick reality check on down payments. Programs from the Texas State Affordable Housing Corporation can definitely help first-time buyers, but if you bring less than 20% to the closing table, it triggers private mortgage insurance, or PMI. And here's the kicker. PMI doesn't protect you, it protects the lender. It's going to cost you between 0.46% and 1.50% of your loan amount every single year until you hit 20% equity. A good Texas calculator will include this automatically.
Which brings us to Section 4, avoiding costly homebuyer mistakes. Let's shift our focus to taking strategic action.
Financial advisors in Texas rely heavily on the 2836 rule. The first part dictates that your total housing costs should never, ever exceed 28% of your monthly income. That means your entire PITI plus your HOA fees needs to fit comfortably into that 28% slice of your paycheck. Pushing past that limit, that's a fast track to financial stress.
And balancing that out is the 36 rule. Your total combined debt payments must stay under 36% to guarantee long-term peace of mind. So your new house payment plus your car loans, student loans, and minimum credit card payments should all stay under that 36% mark. Using your calculator early on helps you check this exact debt-to-income ratio instantly.
Beyond the math, you've got to watch out for common traps. Don't forget that basic maintenance and utilities will hike up your living expenses. I mean, when the AC breaks in the middle of a blazing Texas summer, you're the landlord now. You're paying for it. Also, please shop around for rates. Accepting the very first offer without comparing lenders can literally cost you thousands. Run the numbers to see what just a 0.25% drop from a competitor could save you.
Honestly, using a Texas mortgage calculator is a simple 3-step process. Step 1. Enter the home price and down payment to find your base loan amount. Step 2. Input the current market interest rates. And Step 3. Add your loan term, specific county taxes, and estimated insurance. Boom! In seconds, you turn overwhelming data into a super clear, manageable plan.
But remember this important distinction. A calculator is a simulator. An incredibly vital one, yes. But to actually compete in the real world, you need a pre-approval letter from an established lender like Chase or Wells Fargo. Without that official pre-approval to prove to sellers you're a serious buyer, your calculator results are really just educated guesses.
So, I'll leave you with this final, provocative thought. Before you fall head over heels for a property and rush to make an offer, are you absolutely certain you've calculated the true cost of that Texas dream home? Don't let sky-high property taxes or surprise insurance premiums turn your dream into a nightmare. Run the numbers, play with different scenarios, and step into the Texas housing market with absolute financial confidence.